Thank you so much to Dylan and Nathan for that great product session. Next up, we have the future of go-to-market from the VC perspective and how it impacts your market cap. Nicole Smith, VP of Marketing, will be leading this session. So Nicole, I'll turn it over to you.
Thanks, Rebecca. Good afternoon, everyone. Thanks for joining all these sessions today. As Rebecca mentioned, I'm Nicole Smith and I lead marketing here at Tackle. So we're going to wrap up the cloud go-to-market experience today with a great discussion about some of the go-to-market trends that two of our investors, A16Z and Co2, are seeing emerge in the market, and then also really talk about how their successful portfolio companies are optimizing for the cloud era and meeting buyer demand. So today we have here with us Martin Casado. He's a general partner at A16Z, and he led Tackle's B round and also invested in our seed round. And he's also a category creator. He created software-based networking before he became an investor. So welcome, Martin. It's great to have you here.
Happy to be here.
And then we have David Schneider. He's a general partner at Co2 Management, and Co2 led Tackle's Series C round back in December. And David has been an operator at many software companies and scaled ServiceNow from 50 million to 5 billion in ARR most recently. Welcome, David. Thanks for joining us today.
Great to be here.
So to kick things off, it would be great to have you each maybe spend a few minutes giving attendees a quick overview of your background and maybe some general thoughts on how you're kind of seeing the go-to-market strategy impacting market cap, especially in light of what's going on with recent tech stock pressure and news of possible slowdowns. Who wants to start?
David wants to start.
Perfect.
Sure. I'll say, hey, I've lived through a number of different cycles in the business from, starting my career in 1990s. So definitely through the excitement and downturn of the dot-com, the 2009 financial crisis. There were some other hiccups along the journey that some lasted short amounts of time, like the COVID shock and then others. But I think now more than ever, the quality of your revenue matters, meaning the types of people you're doing business with, the duration of the contracts, knowing that the problems that you're solving are real. And I think you want to look at, when I say the type of revenue, it's also the types of customers you're selling to. There are certain companies that are founded by or started and funded by venture capitalists. Some of that capital will be harder to spend in the next year or two as they're trying to conserve capital for times to come. While I think some of the larger enterprise companies are going to be using technology to try to drive efficiency and cost savings. And so again, the type of customer matters. And so as we're evaluating companies, we're looking at who the customer makeup is and the duration of contracts.
Yeah, that's a great point. And Martin, how about you?
So when it comes to B2B companies, pretty much the most important business drivers that go towards valuation or go to market, right? I mean, it's basically the variable cost, at least in software. So in software, COGS tends to be pretty low, right? Whatever, it's software. And then almost all the variable costs is go to market. So how you structure your go to market are by far the most important decisions when it comes to kind of impacting your valuation. And we're actually in the middle of a very big shift, right? And so I think both David and I have seen the shift from both sides, right? So, 5 years ago, when both David and I were operating, what you would say is, well, selling is very hard and it takes a lot of people to sell something. So you got to make sure that you get like a big initial sales side, big initial deal size, because that's going to actually drive your margin. And the entire industry is kind of built around this notion that you need to have big deals to drive the margin. And then you would build a special type of go-to-market strategy around that, right? You'd say, okay, we need pre-sales and we need SCs, et cetera. What has happened a lot lately is there are alternate routes to market where deal sizes have gone much smaller, but then you make it up after the sale and post-sales, right? So things like cloud marketplaces, right? Things like product-led growth, things like open source creating inbound. And this changes go-to-market strategies. You have to think about partnerships. You have to think about, customer success. And again, if your NRR is changing, is what drives your economics, you're going to have a very different go-to-market strategy. And so, probably the single most important decision on your valuation comes down to go-to-market and pricing. That is shifting right now, right? From basically these kind of, pre-sales, high ACV to now these alternate ones, of which, marketplace is a very big one of them. And in particular, in a downturn, this is true, right? Which is, it used to be that you could kind of buy your way out of having to worry about this stuff just through growth. Like you just take VC money and just kind of incinerate it in sales. And people are like, oh, you're growing, you must be great. That isn't true anymore. Like now they actually care about margins. And as a result, like this conversation is particularly timely.
Mm-hmm. Yeah. Those are some great points. And I think that's a really good lens to set up this conversation. And you mentioned a lot of the things, that I've been thinking about and that we've talked about kind of throughout the day in a lot of these sessions. So from the go-to-market standpoint, I think it used to be like a company was either, top down, and then, a lot more recently, a lot of companies have been this bottoms up product-led growth standpoint and, building that way. But do you think software companies can take a multifaceted approach and, have some bottoms up and tops down and, even some of this marketplace selling motions and including that in their strategy? And how do you see companies going about this that are successful in your portfolio companies and kind of merging these strategies together?
So maybe I'll say something.
Go first.
I'll say something. I'll say something very quickly, and then listen. David has forgotten way more about sales than I'll ever know. So I'll just say something, which is, I do think that there's a bit of a false dichotomy between this bottoms up, top down, and a lot of people talk about it. But for me, here's the real structure that you have to know, which is the majority of the value going to happen pre-sales or post-sales? That's really what defines the world, right? So some things that you sell, people want to pay for upfront, and then they don't want to pay for anymore, right? And therefore, you have to maximize the dollars that you get upfront. And other folks, they want to try it before they buy, and then as they use it, they want to pay more. And for those, the majority of the dollars happen post-sales. And both of these require you to think about what do I do on the product side? What do I do in pre-sales? What do I do in post-sales? And so I think yes, you can definitely do you could definitely do bottom up and top down, but obviously it's even more complicated than that, which is now you've got to stitch together community inbound, pre-sales, post-sales, marketplaces, all of these things, and then you've got to map it to how the customer wants to buy. And with that, I'll leave it to David, who again has lived this a lot.
Well, and I think, Martine, you hit it really well. I mean, I think we're living in a world that is there is not one specific way to reach a customer. And I think for you as a company, you have to understand who your target personas are and how they want to consume. If you're selling to a developer-based audience, hey, product-led growth and the ability to try technology before you make big commitments is a wonderful adaptation to a model that I wish I would have had 20 years ago when I was selling dev tools. So this ability is a wonderful thing. Now, I think marketplaces are a phenomenal way to reach customers, both from a standpoint of you get to leverage some of the seller capacity of the large marketplace companies, whether it's AWS, Google, Microsoft, IBM, what have you. But more than that, you get to leverage the marketing reach as well. But you also shrink the length of time in contract negotiation. That can be one of the major roadblocks to enterprise selling. So as you understand the different ways to reach customers and how to reduce friction, it becomes one of those things what are the mechanisms I can try and use to bring me closer to the customer, not further away, reduce friction, but allow me to continue to understand the business value that I'm providing and making sure I'm setting myself up to do that in an optimal way. So I think it is not just one model, it's a combination, and the new technology and new ways are advantage to all of these new companies trying to reach their customers.
Yeah, definitely agree. I think you're going to have to support all of it, and sellers really have to think about, buyers want to buy in different ways and meeting them where they are and, building the go-to-market engine with that in mind as we, move forward with all this.
Nicole, very quick. I think David said something which is really important and really easily lost, which is it's nice to believe that like we can come up with whatever go-to-market model we want and that just works.
Mm-hmm.
But really, it's the shape of the product market fit that dictates this, not the company. like you can't sell things in a way that the market doesn't want to consume, and so having a sensitivity to like how the industry is shifting and how the market wants to buy is really part of this problem. And I thought actually David articulated it well, and it's worth underscoring.
Yeah. That's a great point. And David and I were talking a little bit about this earlier is, kind of the product fit. And if your product doesn't do, what it's promising to do and you don't have the value there, how does that fit into this? So maybe like talking a little bit from both of your perspectives on, what you're seeing with products and how they're coming to market and, what the problems that products are solving and, how that kind of fits into this go-to-market equation as well.
I'll start on this one. I think one of the things that I see founders sometimes struggle with is they get really enamored with technology for technology's sake. And it's like the greatest thing they've been developing. Sorry. But your technology solves so many problems and it revolutionized networking. So let's call that out first and foremost. I think we have to look at what is the problem that we're solving. And, is it a 10 times better solution than whatever they were doing before? Or is the problem really not that interesting to solve? Because if you can't answer that question, that's really the first bit here to be successful, especially in a climate where dollars and cents are going to be scrutinized more. So really understanding that issue, ask yourself, what are the different and available ways to reach that kind of customer? And do I know the answer from the customer's voice, not just from my perspective as the product designer or developer? Do I get a sense from the customer? And I always think that before you write or build a product, you should be interviewing many, many different companies and customer types to kind of validate things. And the best companies I've been part of, they've done slight pivots, right? As they got closer to the customer voice to understand that we're really solving a problem. And I think when you think about marketplaces to reach a customer, that does not mean that you stop talking to customers. It means it's just a mechanism to reach them, to encourage the conversation to happen and to make the procurement and marketing process a lot easier for you.
Yeah, I think that's right. I just want to add, as opposed to like restate what he's saying, because I think that's correct. I just want to add something. So, if I were in a startup right now and I were thinking about like, okay, how do I think about product market fit and how it overlays to go to market, I would try to categorize my company in one of these in one of 4 areas. And so these are kind of like the 4 way I think of companies. So there are some companies that are doing category creation. And like that's chewing glass. It's just really hard. Nobody understands, they probably don't even understand that they have a problem, right? So you're like, oh, you have this problem. Oh, I didn't know I had a problem. No, you do. Like you need cars, type thing, right? So if you're in category creation, just know your life is going to be very tough and it requires a lot of evangelism, etc. Then there's the kind of early market where you're starting to get some market pull, but like you're still TAM limited. This is very common with open source companies, which is, like you've got a community that uses your open source and you get some pull, but like eventually you run out of those, open, like that community. And then you almost get into a category creation mode where you have to like learn another go-to-market or build out direct sales or something like that. So that's the second one, which is like you have some inbound, but like you're probably going to be TAM limited. The third one is, are you in a mature competitive market, which is like there is a buyer, you're doing pretty well, but there's a lot of competition there. And so a lot of what your go-to-market is around basically the competitive dynamic. And then the fourth one is the one that we all hope to be in at some point in time, which is you're in a pull-based monopoly, which even if you're small, it's a large market, you're the clear leader, etc. And I think that these levels of product market fit really do dictate incredibly different go-to-market strategies and sensitivities. And I would just try to categorize what you're in relative to that.
I love thinking about it through that perspective. That's a great lens that I think probably marketing leaders and probably, sales and go-to-market leaders don't think about it through that perspective, especially if they're going into a new company and looking at the product and the problem that they're trying to solve.
Totally, yeah.
Something that's come up a lot throughout the day too is a lot of the companies that are joining us are, startups, and they're trying to scale their go-to-market operations right now. And a lot of them, using cloud marketplaces for that, but just, as well as some of these other channels that we've talked about too. But, would love to hear from both of you. I know this could be a long answer and lots of different options here, but what are some of the common struggles you're seeing with companies as they try and scale their go-to-market from that 10 to 100 million in ARR and get to that next big phase of growth?
I'm going to double down on what I said, what I just said,
Mm-hmm.
and then I think Dave will give you a longer answer, which is. So I think all companies go through 3 stages. There's the product stage, there's the sales stage, and there's the operation stage. And you can't skip stages. And I think the biggest problem is like sometimes a founder hopes they're in one stage, but they're really not. So for example, the product stage, you have to find product market fit, right? Like you just can't you can't sell something that doesn't have product market fit. And you should not be worried about unit economics, if you don't have product market fit, right? And so I think until you're out of that stage, you're not out of the stage. The sales phase is really about, once you have product market fit, is getting to a repeatable sale. That is hard. And that's all of the mechanics of how do you do marketing? What's the right go-to-market model? What's the right sales team? How do you comp them? So again, some companies, they're 6 million in ARR or 10 million in ARR, and they're immediately thinking, oh, my unit economics aren't good. Well, it doesn't matter because you're still learning how to sell the darn thing, right? And so make sure you get through the sales phase, before you kind of, start worrying about that stuff. And then there's the operations phase, which is now, you're dealing with the channel, you're dealing with, international and all of this other stuff. And don't worry about that until you're there. But once you're there, you actually have to worry about it. And it's a different skill set. So I think each stage requires different strategies, different leaders, different skill sets. And just knowing what stage that you're in is incredibly important.
So on that, I don't think you always need a different leader because I was a leader through a couple of those stages. So
right,
I'm going
yeah,
to
for sure.
say,
Good point.
if you find the right person, you don't need a different leader. But I do think that one of the key things that has to happen when you're developing your route to market and you're thinking through scale is, as you hire a few more than those early adopter or early salespeople that are heroes that figure out the sales motion, you have to learn what those people are doing and create enablement packages and think about things in playbooks. So I was a big believer in teaching my go-to-market teams the various plays I wanted them to run, how to qualify certain opportunities to find like-minded buyers. Then once you had that, what would you say to them and what would the value messages be that are repeatable and then have success? Because that becomes the difference between a $10 million company or a $5 million company and a 50 or then 100. As you continue to grow, you got other scale issues you got to worry about that require different management techniques, et cetera. But that ability to take the first few superstars and create a team of superstars is one of the most important things you need to do at that juncture.
I think that's all really great advice for companies that are in those stages and thinking about how to navigate these next steps.
No, I just one more thing quickly, which is in all of this as you're listening to this, as people are listening to this, which is a common theme is if you're not piped into the nervous system about how the customer is thinking about buying, it's very difficult to actually come up with a strategy, right? And so it's just very important to understand that dollars shift, marketplaces are where a lot of software is being transacted today. It's just the case, right? A lot of software is being consumed using kind of product-led motions. And so you really have to understand what is happening on the buying side as you develop these strategies.
Do you think there's any key roles that software companies that you've seen work really well at software companies for understanding this buying behavior? Is that usually you see that being the product marketing function or customer marketing, or kind of a combination of a lot of different people at the organization really diving in and understanding this?
David,
yeah, I mean, I would describe it as we had learning calls. So when I was doing my ongoing sales forecast calls that are just commonplace in business in running an organization, more importantly, at these early phases, I was asking about what did we learn from that client, that conversation? And I expected everyone on my team, and I invited product marketing, product management, engineering to these calls because we wanted to be a learning organism and see and hear from so many people. So there are other technologies that you can buy that help you kind of get that information. But I think just organizationally, set yourself up so that everybody who's having a conversation with a company is sharing what they're hearing on a regular basis, so that you can continue to evolve your thinking about how the customers are consuming your technology.
Totally. And I think these things tend to be like a pretty tight partnership between product marketing and sales. Then over time, kind of like channels and partnerships too. I mean, that tends to be a bit later. And then depending on the go-to-market model, like it kind of goes, more towards PM if it's product led. If it's kind of more direct sales with, a lot of like sales led, pipeline growth. It's in sales, etc. But it's definitely a multi-function and very important behavior.
Yeah, definitely agree. And I think it changes a lot, as I think you both mentioned, and it's not something you can document once and then throw it away and not look at ever again.
Another thing people do is they'll literally take I worked in company X and then I'm moving over here. And then they take their old understanding of the market. And I that just almost never works, right?
Yes. Yeah. It's just because it worked one way, one place. You can't take that same playbook and replicate it anywhere else, really.
Totally.
Maybe, for one question here, what if you were going to give some advice to some executives as they're looking to scale their go-to-market systems, what would you say to them?
Dave, you want me to take that?
Okay.
Yeah. Who's doing it? Rochambeau?
You go.
Okay. I think it's what we've said before, actually. So I won't take very much time on this answer, which is you must understand both the secular trends in the industry as far as buying. Like we've talked about, PLG and bottom up is a secular trend. Marketplaces are very much a secular trend. There's a tremendous amount of money being bought and spent. So A, understand the secular trend, and then B, be incredibly sensitive to the product market fit and how the customer is used to buying. I can't tell you how many pricing strategies I say not work because they just aren't sensitive to how the customer's used to buying, whatever it is that you're selling. And so it really is have that sort of focus as opposed to take your run book from your previous thing and try to impose your will on the market. I mean, the market is greater than your strategy book, I promise.
Definitely, that is so true. I mean, I remember in my past life trying to come up with pricing strategies that seemed perfect for us, but when trying to roll them out into a customer environment, we just got vetoed left, right, and center because they're that's just not how I consume or can budget for something. So you have to listen. You also have to be strong about when you do have an opinion, you got to push that a little bit on the marketplace. And no one ever likes pricing. I can almost guarantee you every customer hates whatever price you give for whatever product or service you're offering. That being said, when you are adopting an approach or technology to reach your customers, whether it's your CRM system or more importantly, the marketplace kind of investment, you just don't sign up with a marketplace and expect it to work. You have to actually invest in the marketplace provider, how you're going to do enablement, how you're going to reach those customers. Just because you have a marketplace does not guarantee success. You still have to do the heavy lifting of building demand, building awareness, then solving the customer support and all the customer problems that you'll find on the journey. But commit yourself as an executive team to reinforce the messages. So you made a strategic decision to go marketplace. How can I be best in breed of companies that take advantage of those marketplaces? Don't just expect average to work. Go beyond average, break the rules, do something new and unique as you leverage them.
Love it. Yeah, we always say, marketplace isn't just you get listed and then all the deals are flowing in. It's not just a set it and forget it strategy, just like any other marketing channel or anything else that you're doing is. And I think that's where still a lot of marketers and just in general, people miss the mark because they don't understand when their buyers are really in market, when they're ready to buy, really understanding that. And then when they are using the right channels to reach them. And when someone wants to buy through marketplace, that's a very specific time when they are in market and you have to, understand all those different points in the buyer's journey, going back to that of really like diving into that area. So just lots to think about, I think, in that area, and really putting all those pieces together from the go-to-market standpoint.
Yeah, absolutely.
Great. And then, maybe just to, wrap up, for you all, as you think about, interesting companies you're seeing right now, what's like an interesting technology trend that you've been on the lookout for, or really interested in, just in the general technology landscape?
Ooh, I know mine. Do you want to go, David?
I was going to say, well, hey, I recently made an investment in this company called Tackle.
That's a great company. I love it.
It's a great company. It turns out it's a really good company. I love investing in companies that are in part of a trend line that matters. And, not to sound crazy here, but I think, the rise of marketplaces is super important. When I was running go-to-market organizations at scale, I was always thinking about how do I reach customers in many different ways to drive efficiency and excitement and continue to overserve the market opportunity I was facing. And I think Tackle is one of these unique places right now that has the capability to do that. And then I love companies that can combine a bottoms up motion with the top down meeting the enterprise. One of my partners wrote a white paper called The Hamburger Sales Motion, Karen Maroney. And I think it's the right kind of way to think about it. It's like, you got to come at this in multiple ways. And companies that are embracing multiple ways to reach a customer are super exciting to me.
Love it. John Yonke used the hamburger model in a slide earlier today in his opening keynote session. We love that model.
Nice. I'll actually double down on what David said, but I'll just broaden it a little bit, which was like go-to-market is shifting. And the thing that's most exciting about this is it really is putting the incumbents on their heels, right? And so before, so much of like actually enterprise was direct sales, where like you owned the account and you just kind of mined that account. And now it's like, products speak for themselves. You have to understand the alternate channels, like the marketplace. Like the amount of money that gets transacted on the marketplace is unbelievable. It came out of nowhere. Like cloud spend is this things are going to consumption models. Communities are more important than they ever have been. Post sales is more important than it ever has been, because expansions drive economics. And so we're just seeing this massive shift in how you kind of do go to market. And for me, this is just opportunity for growth, right? I mean, like, listen, if you have a new product, it doesn't matter if you're a big company or a small company, you've got a better chance of that product getting out there than ever before, just because you can do these approaches without requiring, being in every single account, right? You can like have a product speak for itself. So you can use marketplaces. And so I think that this is a broader trend that, I think is going to continue to reshape the landscape over the next decade.
Love it. Agree with you on both of those points. Well, with that, we're out of time, but I will follow up on any additional questions. And I just want to thank you, Martine and David. I know you both are very busy. Just really appreciate you both joining us today and sharing your perspectives on the future of go-to-market. So thank you again, and hope everyone else has a wonderful afternoon. And we'll be doing a closing keynote. Bye, everyone.
Okay, super. Bye. Delighted.